of Market Insights. Very good morning. I'm Kelvin here. Today will be the Thursday, the 11th of September 2025. So as usual, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So before we jump straight into the intraday technical outlook of all the broad-based cross asset classes, which we will have for today, let's have a quick recap what has taken shape yesterday, as well as in today's early Asia session before the start of our daily dose at 11 a.m. Singapore time in terms of their respective impact on the intraday movement of these broad-based cross asset classes. So let's start with yesterday first. So yesterday we do have a rather tier 2 inflationary trend data up from US, which is the producer price index, PPI in short. So that is actually a gauge of cost of business or the cost of doing business in the US. That means, put it away, that it's more like raw material costs that the US businesses can incur. So yesterday, PPI came in below expectation based on both the headline and the core. So the headline PPI that is including energy came in way below what market is expecting. So market expecting is a slight a 4 basis point decline from a previous month print of 0.7%. So it came in at 0.3% over here. And also previous month, there was actually a revision downwards as well. Previously, it was reported at 0.9 and it revised downwards to 0.7. And if we strip out the energy component, the core PPI month on month also came in at a negative growth of negative 0.1% month on month for the month of August from the previous print of 0.7% and way below market expecting at 0.3%. And if you strip out the seasonality elements of it, that means we stretch it out from a year-on-year basis. So on a year-on-year basis, the core PPI year-on-year inched down lower to 2.8% year-on-year for the month of August and below the revised figure of 3.4% printed in the previous month of July. And that 3.4% was also revised 3 basis points lower from 3.7 and also came in way below market expectation at 3.5%. So with this rather softer PPI number, that means indicating that the cost of materials of businesses incurring such we call it business input costs is now getting the trend of growth is now plateauing instead of rising. So how do I know that? If I were to look at the core PPI year-on-year trend, very clearly it starts to actually plateau over here. So if you go to the 10-year trend, very clearly it starts to inch downwards by shaping a very clear lower high at this point in time, all right, over at this area here. So indicating that give the ammunition for the Fed to conduct its highly anticipated Fed dovish pivot next week, which is on the 17th of September. So if you look at the Fed funds futures traders pricing based on the latest calculation or populated by the CME Fed Watch 2, so now we have a high chance or 100% chance that the Fed will cut or potentially cut on the 17th of September to bring the Fed funds rate down to 4% to 4.25%. And now there is also a debate among the economists, and also there is a pricing that is being done by the Fed funds futures traders, not high, but a small percentage of them is potentially expecting a much larger cut of 50%. So this is 8% over here, expecting the Fed to do more on the 17th of September to bring down to 3.75% to 4%. And this 8% was not even seen last week and 1 month ago. So this slight chance of a 50 basis point cut only materialized on last Friday after that lackluster November payroll data and being stabilized at this around this 8% to 7% level after the release of that weaker and lackluster PPI data that was released yesterday. So What's interesting over here is that if we were to actually, market now is more concerned about what would the Fed will do going forward in the next 3 to 4 months or even 1 year ahead, is by looking at the aggregated tab over here. So on the aggregated tab of the CME Fed Watch 2, a high chance right now of 85% that the Fed will do another 25 basis point cut on the subsequent next meeting, 29th of October this year, to bring it down to 3.75%. And after that, another high chance of more than 60% now. So previously, yesterday, before the release of the PPI data, the anticipated third interest rate cut by the Fed on the 12th or on the 10th of December 2025 was hovering around 60%. So right after that lackluster PPI data released yesterday, it actually increased up to 72.18%. So rather a high chance that now market expecting a 3 interest rate cut by the Fed before 2025 ends, to bring the Fed funds rate down to 3.5% to 3.75%, and another potential 75 basis point cut for the next year of 2026 to bring it down to 2.75% to 3% by the time on the last meeting date, which is the 9th of December 2026. So what we could see over here is the US dollar is being rather hammered on the softer side due to this rather dovish pricing by the Fed funds futures traders. So if you look at the US dollar index over here very quickly, so the US dollar index continues to remain rather soft yesterday. So yesterday it ended almost unchanged at positive 0.06, almost unchanged. And in today's Asia session, it's also trading unchanged as well, but it continues to trade below the 20 and the 50-day moving average since the bearish breakdown of it on last Friday, which is the release of that non-farm payroll data. So right now it's actually looking to test that 97.3 important support level on the US dollar index. So that was tested on Tuesday, which is this week, before it managed to stage a bounce. So very likely later I'll share with you today will be a key risk event that it may retest again at 97.30, and potentially if it starts to break down below this 97.30 for this week, there's 2 key risk events. Today will be the CPI data, and as well as the release of the latest monetary policy decision on ECB. So later I'll touch more about that. All right. So very quickly, why 97.30 is very important. So if we go to the monthly chart of the US dollar index, 97.30 is indeed a key long-term circular support of being defined by this long-term ascending channel lower boundary that has managed to cap the previous sell-off in May 2011, and also the most recent sell-off in June this year, July and August. So this is actually confluencing or coinciding with the long-term ascending channel support that I drew from the low of May 2011. So if you start to see a breakdown below 97.30, confirmed by a monthly close below it, that could potentially kickstart a long-term dollar trend weakness. That means it's a multi-month dollar bearish trend that could actually unfold in the FX market. So from a very short-term perspective, the dollar in the last two sessions has been trading rather sideways. So if you look at the 5-day rolling performance of the dollar, it's been being sideways. So the dollar now is underperforming the worst against the Aussie and the Kiwi. So the dollar Aussie cross, based by looking at one US dollar equals to how many Aussie, is down by negative 1.44%. And because the Aussie and the Kiwi track very closely together, so the dollar Kiwi rate is also down by negative 1.54%, and the rest of the other major pair is just traded sideways. Right. So so later I'll touch on more on the short-term technical outlook on the major FX pair. So over to the FX market, yes, over to the stock indices yesterday, the major US stock indices. So the major US stock indices continues to bask in the limelight. So both the SPX and the Nasdaq 100 managed to breach fresh all-time high again yesterday. So the underperformer is the Dow Jones Industrial Average, which is down by negative 0.48%, followed by the Russell 2000 down by negative 0.16%. So the Dow Jones Industrial Average, yesterday it retested the current all-time high again, but can't break above it due to some weakness of its component stocks like Visa and the healthcare component stocks within the Dow Jones Industrial Average. So if you look at the S&P heat map yesterday over here, we start to see rather clear bullish momentum that is being seen on the semiconductor. All right, so this is more related to the AI team play, but where else we start to see three mega cap technology stock yesterday is actually deeply underperforming the S&P 500, where Apple is down by negative 3.23%. So that came on the backdrop of a rather less enticing or less exciting Apple product launch, which took shape on Tuesday itself, where they launched the next flagship of iPhone 17. So because the price, they didn't actually up the selling price that much, and also the much talk about iPhone Air, which is a thinner version of the iPhone 17, due to the instability regarding about its battery lifespan. So that actually has a negative feedback look back into the share price of Apple for the second consecutive day. So what's interesting I'll share with you guys over here is Oracle, which is now considered as one of the team play within this AI productive, AI optimism, high productive template that is unfolding in the US stock market since post-COVID. So Oracle yesterday stole the limelight by rallying close to 36%. So that is the biggest one-day stock rally in record based on its history. Based on Oracle history, up by positive 36% due to the fact that Oracle give a very, very rosy, aggressive, we call it revenue outlook for its cloud business, cementing its place in the race to support demand for artificial intelligence computing. So the company signed deals with major customers, including OpenAI, NVIDIA, ByteDance, which is the China, we call it parent company of TikTok, helping to boost remaining performance obligation to 455 billion by the end of the fiscal first quarter. And that actually give a lot of positive, we call it sentiment back into the stock of Oracle. And that could also be explained why other mega cap technology stock underperformed yesterday. Especially we have Amazon, Google. Google is almost unchanged, and Meta there is a bit of rotation play back where profit taking takes shape in this Amazon, Google, Meta, and flow into Oracle and even Microsoft as well, which is close almost which is only have a modest gain of 0.39%. So what I'll share with you guys over here is this a start of an AI bubble? I would say that AI bubble will only take shape if this company doesn't has real earnings. But given the fact that we know that earnings growth has been very strong, not say earnings growth, I would say that constant revenue inflow has been pretty much robust on this AI related team play mega cap technology stock. So that could potentially still supports the medium term uptrend of the S&P 500, the Nasdaq 100. And later I'll share with you the technicals are still pointing to a bullish trend from the short term to medium term on these major US stock indices as well. All right, so another news flow I will share with you guys is more pertaining to the Asia Pacific region over here. So in today's early Asia session, we have the release of Japanese tier 2 inflation trend data, which is the PPI. All right, so this PPI is also rather important because it do have some impact that it can flow into the trend of the core CPI trend in Japan. So later I'll share a chart. Why do I say that? So for Japanese PPI today, it came in within expectation, but managed to hold a firmer trend, going above the previous month trend of 2.5% year on year that was printed in the previous month of July, and it came in at 2.75% year on year for August. So that's within the expectation. And what's interesting is that the previous July month of 2.5% has been revised slightly downwards to 2.5 from 2.6%. But if you look at the trend of the PPI from a longer term perspective by showing you that this chart over here, so this is the PPI index over here. So you will realize that this PPI index, right, every time it bottom, right, by those highlighted in light green boxes, it actually lead the trend of Japan core CPI and this Tokyo core CPI, which is excluding both food and energy. And what's interesting over here is that what we could see now, there is actually a turning minor bullish, one minor upside reversal from the August print of 2.7%, which previously in the month of March, in the last 4 months or so, it starts to decline in terms of the PPI growth. So with this slight uptick in the Japan PPI, taking into account the latest data of growth of 2.7% year on year, potentially it could have a leading on impact based on the previous scenario of bottoming up first, and that could start to see a continuation of firmer trend in the core CPI data trend for Japan, both on the Tokyo region and the nationwide Japan region. And that could continues to see BOJ short-term policy interest rate to continues its gradual interest rate hike, not cut, because BOJ is still looking to normalize interest rate on the upside after being in a very low interest rate environment, or even some points of the year it was negative in the last 20 years or so. So that potentially could also put upside pressure on the yen against the dollar, given the fact that we now start to see fundamental metrics diverging from US and Japan. All right, so that's for the data for today. So now another interesting highlight I want to highlight to you guys over here is trade tariffs news flow. This trade tariffs news flow so far has very little material impact on the Asia Pacific stock market, especially China and Hong Kong. So Mexico now has decided to plan, not confirmed yet, plan to impose tariffs as much as 50% on cars and other products made by China and several Asian exporters. So we know that previously Mexico is being used as a third-party country to evade a higher tariff rate when those countries that has a higher tariff rates by US, so they actually play around with the so-called the country of origin. So they tends to actually shift their operation to Mexico, and from there they export out to US, escaping the higher tariff rate. So right now, in order to close this loophole, Mexico has decided to impose a tariff as high as 50%, but that has material, not so immaterial, I would say, impact on the Asia Pacific stock indices as we are speaking right now. So what we could see over here is that the Nikkei 225 continues to be very bullish. So right now it is actually basking into a record high. So like I mentioned earlier on, despite that political upheaval in the resignation of the previous the latest incumbent Prime Minister Ishiba, it does not derail the bullish trend of the Nikkei 225 yet. So it's still up right now by 1%, but rebounding off from our key short-term pivotal support highlighted. And the Hang Seng, there's a minor pullback after yesterday's bullish move above the range resistance level at the 25,860. Now it's down slightly by negative 0.6%. And what's interesting is the A shares, the CSI 300 today has a rotation play. So China A shares now is up by 1.22% in trading at the intraday high. And the rest of the other Asia Pacific benchmark index, the KOSPI 200, which is the South Korea benchmark index, is up by 0.31%. The Thai X is up by 1%. STI almost unchanged, and the ASX 200 is down by negative 0.4%. So overall, there's more positive than negative on the Asia Pacific stock market, despite that Mexico plan of imposing a 50% tariffs on cars and other products made by China and several Asian exporters. So that is likely targeting Japan, Malaysia, and maybe perhaps only Singapore as well. Okay, but so far negligible impact on the performance of the Asia Pacific stock market, as most of the narrative has been focusing on a weaker US dollar due to a much more dovish pivot that the Fed may starts to so-called unfold or materialize starting from next week over here. All right, so one more particular news flow and share with you guys before we jump into the intraday technical outlook is geopolitical risk premium surrounding more pertaining to the oil market over here. So for the oil market, we know that previously oil has been rather weak because of that. One of the reason is the potential removal of sanction on Russia oil supply or Russia oil is able, if that materialize, that means more oil is able to flow into the global oil market. Then on top of this continuation production hike by OPEC plus, that could put downside pressure on oil price. All right, but however, this peace talk between Ukraine and Russia seems to be getting further and further away of achieving, as what proclaimed by that meet up in late August between between US President Trump and Russia President Putin. So yesterday, for the first time, Russia actually went into Poland airspace via their launching of several drones, and they went into Poland airspace to actually the end intention is not to hit Poland, but is from via Poland to actually attack on Ukraine. So because of this, that considered as a violation of Poland's sovereignty, and Poland shot down the drones over here and make a formal complaint to NATO over here. So does it means that this is considered as an attack on the NATO members over here, which means that that could potentially lead to more offensive maneuvers by NATO members against Russia. All right, so that actually created a geopolitical risk premium and saw the oil prices rising for the third consecutive session yesterday. So what you could see over here is, let me share with you the oil price. So this is the daily chart of oil. All right, so oil yesterday rose for the third consecutive session, up by 1.51%. But what's interesting over here is that it stopped again at the 20-day moving average after the bearish breakdown of it on the previous Thursday, which is on 4th of September. So very interesting to see some technical levels that are still holding the oil prices from breaking up further. So later I'll touch on that on the intraday technical outlook segment. All right. So now let us move now to the intraday technical outlook segment, starting with the FX market. So let me expand my screen. All right. So I think the screen is good right now. Okay, so let us start with the FX market first, starting with the euro dollar. So the euro dollar will be a particular interesting pair to watch out for today, given the fact that later we will have a ECB monetary policy meeting out later. So later I'll share the timing. So it continues to actually did a kind of a profit taking, or I would say that a consolidation or profit-taking price action behavior since the start of the week on Tuesday, after unable to breach above the resistance level of 117.70, 117.90. But so far, it still managed to hold above the 20-day moving average and the 50-day moving average, and as well as the minor ascending channel support that is still in place since the low of 1st of August this year. So for sure, the pivotal support to watch out for today ahead of ECB monetary policy meeting decision, and as well as the press conference of ECB President Lagarde, will be at 116.75 over here. And right now, we start to see a series of higher low that is being depicted on the hourly RSI. So indicating some form of bullish momentum that is coming back into the euro dollar, at least from a short-term perspective. First resistance, it got to break through a hurdle. The intermediate resistance is at 117.35 over here. Okay, give me a minute now. 117.30. All right. So a breakout above 117.30 potentially see a retest of this 117.70/117.90. So only a clear breakout of 117.90 will increase the probability of a start of a another round of bullish impulsive upmove sequence to target the 1st of July and the current 52-week high at 1.1830 next, and it's also a 1.382 Fibo extension level as well, taken from the low of 3rd of September. However, a bearish breakdown below 116.75 will invalidate today's bullish bias to see another round of minor corrective decline sequence extending further to the downside to retest the 2nd of September and 3rd of September minor swing low area at 116.17. Okay, 1.1617. All right, next up will be the sterling dollar. So the sterling dollar also continues to trade sideways after Tuesday's test on the first resistance at 135.90, 136.10, which is so the minor swing high area of 14th of August, and it just traded sideways over here, holding also above the 20-day and the 50-day moving average as well. So I'll be using a Titan short-term pivotal support level for today, which is very slightly below the 50-day moving average at 134.50, and also confluence with a key Fibo retracement level after taking into account of that rebound from 3rd of September to 9th of September. So that is the 50% Fibo retracement level. So using a Titan short-term pivotal support on the sterling dollar for today, 134.50, maintain that bullish bias. First resistance level to watch will be this minor range resistance at 135.90 / 136.10. Above it potentially takes us up higher towards 136.50, 136.80, which is the congestion area of 27th of June and 4th of July this year, which is 2025. Only a bearish breakdown below 134.50 will invalidate the bullish bias to see the extension of this minor corrective decline sequence extending further towards the downside. Exposing the next two support level will be at 133.95, followed by 133.35, which is the important minor swing low of 2nd of September and 3rd of September, where the sterling dollar managed to survive on that spike up in the 30-year gilt yield that induced the sell-off in the sterling dollar last week. Okay, next up will be the current outperformer, which is the Aussie dollar. So the Aussie dollar continues to trade in a bullish trend, and it's kind of an accelerated bullish trend after I draw this steeper minor ascending channel from the low of 4th of September. So right now, I will have a tighten short-term pivotal support at 65.80. Over here, 65.80. So right now it's now yesterday it hit the first resistance at 66.40 and do a minor pullback over here, and now this minor pullback is hovering above our first support level, which is so the UK European session low yesterday at 66 figure level, which is so the lower boundary of this steeper minor ascending channel from the low of 4th September. So as long as 65.80 tighten short-term pivotal support holds, still maintain that bullish bias on the sterling or the Aussie dollar. So 65.80 short-term pivotal support on the Aussie dollar. Next resistance level to look out for after the bullish breakout of 66.40 will be important major resistance zone at 66.60 / 66.80. So why this 66.80 is a major resistance area to watch is by looking at the daily chart. So this 66.60 / 67 figure is actually the upper limit of this medium-term expanding wedge configuration that has been in place since the low of 24th of April this year, and also the upper limit, and also right exactly close to the long-term circular descending trend line that kept previous significant bulls from running up further, that has been in play since 25th of February 2021 high. So that is close to about a four-year long-term circular descending trend line that is still in play for the Aussie dollar. So for sure, if it starts to break out above this 66.60, 67 figure level, then potentially we could kickstart a multi-week to multi-month, potentially a bullish trend on the Aussie dollar going forward. Right, something to look out for in the long-term perspective. Now, next up will be the dollar yen over here. So the dollar yen continues to trap within this sideways range over here. But what's interesting over here is that that previous push up on the start of Monday session that is driven by that so-called potential new PM candidates that are in favor of more looser expansionary fiscal policy and urging the Bank of Japan not to hike rates but rather to cut rates, the narrative has started to dematerialize in the FX market. So the dollar yen gap up on Monday has really been evaporated and go down and print a lower low, hit the support level that we highlighted before bouncing up in yesterday's session. All right, but what's interesting over here is that the bounce didn't surpass that 20-day and the 50-day moving average that has been taken down on Tuesday. All right, over here. So with that, the first resistance level to watch out for today will be 147.60. I will tighten my pivotal resistance level to this former gap up over here, now turns into a critical congestion level. Why? Because after the gap up support has been breached, price action rebounded, but that rebound can't break out and starts to see that significant intraday slide. So this for sure will be a very significant psychological level that the bulls got to surpass. All right, so that will be my pivotal resistance in the short term for today, and as well as if we do the Fibo retracement of this sell-off from that significant Monday high all the way down to the low of Tuesday low, it's correspond to the 76.4% Fibo retracement. 147.95, slightly adjusted downward pivotal resistance level on the dollar yen. Maintain that bearish bias First support level to watch will be that support that managed to bounce off on Tuesday, will be at 14670 slash 14640. A breakdown below it will see the important medium-term support coming in at 14595. So this 14595 is now the ascending range lower boundary that has been in play for the dollar yen since the low of 22nd of April 2025. Only a bullish push up above 147.95 will negate today's bearish bias to see a squeeze up towards the upper limit, and also confluence with the 200-day moving average at 148, upper limit of the sideways range configuration of 148.75, 148.95. All right, so this is a kind of a sideways range configuration that has been evolving since 5th of August. All right, so that will be the upper limit. Okay, so that sum up the FX market. So now let us immediately go to the major stock indices very quickly, starting with the Hong Kong 33. So the Hong Kong 33 did a bullish breakout from that 4-week of ascending triangle sideways range configuration that has been in place since 13th of August over here. So breakout took shape yesterday, hit our resistance, then thereafter did that pullback exactly retest at this important level and shape a minor bullish reversal as we are speaking in the last 2 hours to today's Asia session, early Asia session. So for sure, 25,860 is indeed a pivotal support level to maintain our short-term intraday bullish bias on the Hong Kong 33. First resistance level to watch for today will be 26,200 slash 26,350. Above it, potentially seek out a higher intermediate resistance at 26,530. We also confluence with the upper limit of this major ascending channel that has been in place since the low of January 2024 low, and also now confluence with the one-time Fibo extension as well. Hourly RSI continues to remain in a bullish momentum condition as it managed to be held by this parallel ascending trend line over here after the close retest of it in today's early Asia session at the start of the Hong Kong stock market operating hours. Only a bearish breakdown below 25,860 will invalidate today's bullish bias on the Hong Kong 33, which represent the Hang Seng Index, to see a much more steeper minor corrective decline sequence unfolding, retesting the next intermediate resistance zone at retesting the next intermediate support zone, pardon me, at 25,640, 25,500. We're so very close to the rising 20-day moving average. A breakdown below 25,500 will see a deeper corrective pullback unfolding to revisit 25,260. All right. Next up will be the Japan 225 that representing the Nikkei 225. So the Japan 225 managed to shape a bullish breakout above 45,050, above 44,000, about time to stay above 44,050, 44,100. So that is the current all-time high. So now it managed to seek a fresh all-time high in today's Asia session. So this will become a first support level to watch. All right, sorry about that. Give me a minute, let me put it in green. Yeah, so this will be the first support level to watch. So pivotal support, I will tighten it up slightly higher from the 20-day moving average previously to 43,580 over here. So this 43,580, if we do the Fibo retracement of this ongoing minor bullish impulsive upmove sequence that is in place since the low of 2nd of September minor swing low all the way up to the current all-time high, intraday high, that consists very closely to the 23.6% Fibo retracement. And if you will do the one as a lower fractal, will be from the low of this Tuesday all the way up to the current all-time high, that constitute the golden ratio of 61.8%. Okay, so making 43,580 a rather important short-term pivotal support level, adjusted one, to maintain this ongoing bullish momentum in the short term for the Japan 225. So we still maintain that bullish bias. Next resistance level to watch will be 44,840 slash 44,970. Above it, potentially seek out 45,460, or defined by the Fibo extension cluster level, and 45,460 is the upper limit of this minor ascending channel that has been in place since the low of 1st of August 2025. Only a bearish breakdown below 43,580 will negate the bullish tone to see another round of minor corrective pullback unfolding to retest the 20-day moving average, acting as the next important support zone in the short term at 43,060 slash 42,850. So that's for the Japan 225. Next up will be the Germany 30 representing the German DAX. So no change for the Germany 30, is continues to hover in this neutrality zone. So yesterday it managed to bounce. I would say 2 days ago it managed to bounce, but still can't break above the upper limit of this neutrality zone, which is at 23,900. So I'll still have that neutrality stance right now for the Germany 30, which represent the German DAX, neutral between 23,900 and 23,490. Unless we have a bullish breakout above 23,900, then I could validate a short-term bullish bias move to expose the next near-term resistance level at 24,155, 24,270 next. Right now, up to the major stock indices right now, starting with the US Wall Street 30 representing the Dow Jones Industrial Average. So yesterday at the start of the so-called US session, it managed to stage a intraday rally, tested the current all-time high level again, that got rejected and did a minor pullback, but minor pullback managed to help exactly at the 20-day moving average, and as well as this minor ascending channel support drawn from the low of 1st of August. So it seems to us that the Wall Street 30 is now consolidating in a minor ascending triangle range configuration since the previous fresh all-time high on 22nd of August. All right. So it's still in a bullish consolidation phase, potentially looking for a bullish breakout on the US Wall Street 30. So still no change. Key levels still remains the same, 45,290 / 45,175, which is the confluencing with the 20-day moving average, pardon me, acting as the key short-term pivotal support zone. First resistance level to watch, or the upside trigger level, will be at the 45,780, the range resistance of this ongoing minor bullish ascending triangle configuration. A clear breakout above it with an hourly close above 45,780, potentially seek out the next intermediate resistance at 46,060, 46,180, which is the one-time Fibo extension taken from the low of 2nd of September. Only a bearish breakdown below 45,175 will invalidate today's bullish bias to see a deeper minor corrective pullback unfolding towards 45,945 and the medium-term support level of 44,715, which confluence with the rising 50-day moving average. Next up will be the S&P 500. So S&P 500 yesterday hit a fresh all-time high and hit exactly at our resistance level at 6,556 / 6,565 before that we highlighted earlier on. So it did a minor pullback, hit our first support level at 6,517 before staging a minor bounce in today's Asia session. So unless it has a clear break above 6,565, then I will tighten my pivotal support for today at 6,516. So pivotal support for today will be at 6,475, a slightly higher one from the previous day from the previous session that I highlighted on Monday. We saw confluence with the rising 20-day moving average. So using 6,475 for now as my short-term pivotal support, maintain that bullish bias on the SPX 500. Next resistance level to watch after 6,565 will be 6,590. Above 6,590, potentially take us up higher towards 6,630, right? Which is the one-time Fibo 1.618 Fibo extension from the low of 20th of August. All right, over here. Give me a minute. Let me do a proper thing. It just went up. Okay, should be, yes, 6,625. All right, let me do it. 6,625. Okay, so it's also confluence with 6,620, which is the one-time Fibo extension taken from the other low of 1st of August over here. Okay, so it's a Fibo extension cluster level. 6,620, 6,625. Oops. Sorry, I think it's my mouse accidentally push it. Okay, let me do a proper one. Okay, make sure that it's connected. Okay, should be 6,630. Okay, 6,620, the one time from that low of 2nd of August, and the 1.618 from the low of 20th of August. That will be 6,630 over here. 6,630. All right, good for now. Only a bearish breakdown below 6,475 that would invalidate today's bullish bias on the SPX to see it floating down lower towards 6,410, below it 6,450 first, before 6,410, all right, which is the zone of this medium-term ascending channel from the low of 23rd of May 2025 low. Okay, next up will be the Nasdaq 100 over here. So the Nasdaq 100 also hit our fresh all-time intraday high before staging that pullback, hitting our first support level at 23,745 before staging that minor bounce in today's Asia session. So no change for now. Still maintain that bullish bias on the Nasdaq 100 over here. The RSI managed to be tapped by this parallel ascending trend line, where the pullback managed to stage a bounce in the late US session yesterday as well, indicating that bullish momentum still remains intact in the short term for the Nasdaq 100. Adjusted pivotal support for today will be at 23,580 short-term pivotal support. Unless we have a bullish breakout above 25,050, then I will tighten my pivotal support to 23,745. So right now, using 23,000 adjusted pivotal support will be at 23,580, slightly upwards. Also confluence with the 20-day moving average as well. Maintain that bullish bias. First resistance level to watch will be at 23,930. Above it, potentially seek out 24,050, and thereafter 24,233, 24,274, which is a Fibo extension cluster level as well. And if you do the channeling technique from this low of 2nd of September over here, okay, that also constitute very closely to the upper limit of this minor ascending channel. Okay, only a bearish breakdown below 23,580 will invalidate today's bullish bias on the Nasdaq 100 to see a slide to expose the next intermediate support zone to watch out for will be 23,470, 23,383, which confluence with the rising 50-day moving average as well. All right, so net still maintain that bullish bias on the Nasdaq 100 with an adjusted pivotal support at 23,580. Next up will be the commodities market very quickly. So the commodity market starting with gold XAU/USD over here. So for gold XAU/USD, price action hit our first resistance at 3,665 / 3,670 before shaping that sideways configuration, sideways movement over here. So right now the hourly RSI is now inching downwards below the 50 level mark, hasn't hit the oversold level yet over here, and there is some form of graphical support at this point in time. Okay, previously, all right, and also the oversold level. So net overall, the pivotal support level to watch will be this 3,600. Still remains the same previously, which I highlighted. So this is a tightened pivotal support previously that I have. So given the fact that price action has been trading sideways and there's a risk of a minor dip, so there could be a risk that the first intermediate, this low here that is being seen on Wednesday, which is 6,620 level over here. Okay, let me put it right in 6,620. Okay, maybe bridge on the downside. So potentially, we still have a bullish bias in any form of any minor pullback that could take shape in today gold XAU/USD, using the pivotal support level at 3,600 to maintain to hold this minor pullback. Then thereafter, potentially there could be a recovery taking shape in gold XAU/USD as long as this 3,600 short-term pivotal support holds. Next resistance level to watch after 3,670 will be 3,687, followed by 3,725, which is a Fibo extension cluster level. Only a bearish breakdown below 3,600 level, which is the short-term pivotal support level, then that could trigger a deeper minor corrective pullback sequence towards this zone over here, 3,561 / 3,536, which is so the area of this minor ascending trend line from the low of 22nd of August. All right, so that's for gold XAU/USD. Lastly will be the West Texas crude oil over here. So the West Texas crude oil, what you could see over here is that it managed to get rejected off the pivotal resistance previously that I highlighted, 64.10, with a bit of excess. All right, on the intraday high that has been taking shape yesterday, that has took shape that took shape yesterday at 64.36. All right, so I have a bit of excess here, 64.10 slash 64.36 level. All right, so still maintaining that bearish bias given that price rejection of the 64.10, 64.36 level over here. And however, first support level, it got to break down to actually see a higher chance of this bearish momentum resurfacing back into the walls, resurfacing back into the West Texas oil will be at 62.90 over here, 62.90. A breakdown below 62.90, revisit the last Friday swing low area at 61.85, right? Only a bullish breakout above 64.36 will invalidate today's bearish bias to see a further squeeze up towards 65 figure level, followed by 66 figure level that confluence with the downward sloping 50-day moving average for the West Texas oil. All right, so that sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key things to look out for? Like I mentioned earlier, today will be a key risk event day because it constitutes of various key data and event that we got to take note of that could create a higher volatility in the global market. So what are these data? So starting from the European session, we do have ECB decision as out at 8:15 p.m. Singapore time today. So market is expecting a second consecutive pause on ECB deposit facility rate at 2% over here, and market will be focusing on ECB President Lagarde's speech later at 8:45 p.m. So there's a high chance that ECB President Lagarde will actually use this speech as a offering a guidance, stating that more or less the interest rate cut cycle has already ended in the Eurozone. Okay, something to take note of. So that could actually put some upside pressure on the euro dollar. But bear in mind, in the FX market, things are relative. We also got to be taken into account of what is going on in the US, which is the tier 1 inflation trend data, the core inflation rate that will be released around the same time of the ECB interest rate decision and the speech of ECB President Lagarde at 8:45 p.m. So that will be at 8:30 p.m. Singapore time. Market is expecting the same rate for the previous month of July at 3.1%. So we know that yesterday the PPI came in weaker than came in below expectation. So if there's a surprise downward move, a downward print of 3.1%, so let's say if came in at below 3%, so that could actually indicate a much more highly anticipated Fed dovish period starting next week. So that could also put some downside pressure on the dollar. So things to look out for today at between 8:15 p.m. to 8:45 p.m. where we have ECB interest rate decision, ECB press conference, and the core inflation rate of US. Okay, releasing at this same particular time zone this evening, Singapore time. Then thereafter will be a quiet US session. No other key data to actually came out. Also, very interestingly, at 9:45 p.m., ECB will release its latest macroeconomic projection. That means indicating what are the medium-term and long-term economic trend and inflation trend in Eurozone. So something to look out for as well that could actually create a bit of volatility after that initial volatility movement between 8:15 p.m. to 8:45 p.m. So that's about 1 hour from 8:45 p.m. So that's 9:45 p.m. Singapore time, which is the ECB latest macroeconomic projection. So thereafter will be a rather quiet session. Then what we have over here is that in Singapore time before the start of our daily dose on Friday at 11 a.m. At 10 a.m. Singapore time, we have one RBA official speaking, RBA Jones. He will be speaking, so that could potentially influence the Aussie dollar rate over here. And for those who have interest in the Kiwi dollar, we have some Kiwi data to take note of. Very early Singapore time at 6:30 a.m. to 6:45 p.m. So that will be the business PMI data for the month of August, followed by retail spending. So that is their electronic retail card spending. Take it away, there's some form of a proxy of retail spending in New Zealand. So that will be out at 6:45 p.m. for the month of August. So with that, that sum up today's daily dose of market insights. A longer one today, which I covered all the intraday technical outlook on the broad-based cross asset classes. So with that, Have a great day ahead, and we shall speak again tomorrow. Thank you.